Hi everyone, it's Peter Schiff. It's Tuesday, May 3rd, 2011. Well, first I really want to talk about a lot of the volatility we've had recently, particularly in the silver market. It's really been on a roller coaster ride the last couple of weeks. Let's start with last week when we had an explosive rise in the price of silver, basically touching or coming close to touching the record high from 1980 of $50 an ounce. Gold also made a new all-time record high, trading well north of $1,500 an ounce. I think the catalyst for the move last week was Ben Bernanke. I mean, first we had a statement on Wednesday that came out where the Fed basically again denied that there was any inflation, committed to finishing quantitative easing QE2. Rates are going to stay low for an extended period. It was a very dovish statement that sent the metals higher. And then Ben Bernanke followed it up with an even more dovish press conference, which I thought was a complete disaster. I saw it described by a Bloomberg reporter as a success. And the reason they said it was successful was because he didn't make any major gaffes. I mean that's how low the bar is to judge a Fed chairman. But I thought it was a disaster. I mean, maybe it was a success. I mean, if you thought the Titanic had a successful crossing, I mean, because some of the passengers actually made it to New York. I mean, if you look at the reaction in the currency markets, the dollar was plunging to new lows. Gold and silver was soaring. I mean, that's hardly a success. The idea of the press conference was to inspire confidence in the U.S., confidence in the dollar. Instead, it instilled fear, and people fled the dollar. But as if that wasn't enough, Ben Bernanke followed it up with a speech on Friday that was just as big a disaster. And we had another huge rise in gold and silver on Friday. It's almost like Ben Bernanke is kind of like the old E.F. Hutton. Remember that commercial when E.F. Hutton talks, people listen? Well, when Ben Bernanke talks, gold traders listen. And if they're bullish, it's music to their ears, and they go out and buy gold because, as I said, he doesn't inspire confidence. He inspires fear, fear for the dollar, fear for the U.S. economy, and so the reaction is to buy gold and silver. I mean, maybe Ben Bernanke should feign laryngitis or maybe come down with some kind of illness so he can check into a hospital or just not appear in public or not speak. Because the worst thing from the Fed's perspective is that if it's trying to perpetuate this illusion that the dollar is sound and that the U.S. is okay, the last thing that Ben Bernanke should do is go out and open his mouth. Because whenever he speaks, it's a sign to sell the dollar and buy gold and silver. Now, this week it's very different. You have a huge drop in the price of silver. Silver dropped all the way back down to $40 an ounce. I mean, as quickly as it went to 50, in fact, even quicker. They say you take the stairs up and the elevator down. Well, maybe we took the escalator up and the elevator down, but we're back down to 40. And I think, one of the reasons that we had a big drop is I don't think Ben Bernanke said anything this week. I actually joked last week that if you see a big rally in gold, there's a good chance that Ben Bernanke is speaking somewhere. And that actually happened to me on Friday. I didn't realize Ben Bernanke was speaking until I saw the $30 move up in gold. And I said, wait, is Ben Bernanke talking? And sure enough, he was giving a speech. But he hasn't given any this week. Now, why did you see this big drop in silver? A lot of people are talking bubble. The bubble's bursting. Look, nothing goes up in a straight line. Silver had certainly gotten ahead of itself. The gold-silver ratio was way in silver's favor in a very short period of time. So it makes sense that you'd have a pullback, especially from a level like 50, which was the record high going back to 1980. So it certainly makes sense that you would get a pullback. What is the catalyst? Why is it happening? I don't know. I mean, could it be because of bin Laden? I doubt it. I mean, that could be coincidence. But, a lot of times markets look for any kind of catalyst to do what they wanted to do anyway. And it's clear that we had got silver. A lot of speculators had gotten into the market. Now, the speculators are not driving the market, but they're certainly participating. Ben Bernanke wants you to think that the reason commodity prices are rising is because there are speculators there. No. The reason there are speculators there is because the market is rising. He's got the cart before the horse. But sometimes the speculators can add to the volatility. If they're highly leveraged, then they all tend to act together, and they look at momentum. And I'm sure a lot of the speculative money now is coming in on the short side of the silver market. Now, I think they're going to end up covering at losses, and they represent future buyers. But, a lot of times the speculators detract from the volatility because they add liquidity and they make it easier for people to buy. They make it easier for the hedgers. So, it works both ways, but at certain times they add to the volatility, and clearly that is the case now. And I think some of the more highly leveraged, weaker holders have been flushed from the market, and we now have some speculative shorts in there. I think that since we've retraced to 40, if you draw a trend line, this looks like a perfect retracement. I think that the vast majority of the correction is over. I think it's pretty safe even for traders who to step up and buy silver at these levels. Does it mean that it can't go any lower? No, but I think now there is more upside potential than downside risk in the market. I do not expect silver prices to go all the way back down to $30 an ounce, but I certainly do expect them to go back up to 50 and higher, especially if you look at what else is going on. The dollar today hit an all-time record low against the Swiss franc. It now takes better than $1.15 to buy 1 Swiss franc. I don't think you're going to see a reversal of the trend in the metals with the dollar making new lows against the Swiss. Also, if you look at the gold market, you barely notice the volatility in the silver market. If we really were rolling over and going into a bear market in silver, I think gold would be rolling over as well. It's not. Now, the gold stocks have been acting poorly, but they've been acting poorly for the entire bull market. Every time the gold stocks fail to confirm a new high in the metal, everybody says, oh, you see, the gold stocks are predicting a bear market, and they've been wrong every time. My guess is that they're wrong again. Also, look at interest rates. They had a Treasury bill auction yesterday. Interest rates on Treasury bills, which 90-day, 60-day, 1 year, are the lowest ever. They're lower than they were at the depths of the financial crisis in 2008. Why is that? I mean, is there more fears of the stock market? Of course not. Stocks have been rising for years. Back at the end of '08, early '09, people were worried about depression, deflation, collapse. Nobody is worried about that anymore. I mean, everybody thinks that the recovery is going great guns. Assets are on fire. Everything is going up. Commodities, stocks, you name it. Why is it that who's buying all these treasuries? Why are treasury yields at record lows? It's the Federal Reserve. That's why they're buying them. And you have to ask yourself, A, what is the consequence of this reckless Fed policy that has yields now lower than they were during the emergency of 2008? And if the economy is as strong as the Fed says it is, or if we've seen the worst, why do we need these low rates? Why do we have them this low? And I'll tell you why. It's kind of like a drug addiction. You always build up a tolerance for drugs. And the more you use them, the more you need to get the same high. And we're so addicted. This economy is so dependent on cheap money that we need all-time record low rates just to have the meager growth rate that we're seeing now. And Ben Bernanke knows this. That's why he's got this economy on life support. And that's why he's not going to pull the plug. So rates are going to stay low. Inflation is going to keep accelerating, and commodity prices are going to keep rising. And the reason that it's so bullish for precious metals every time Ben Bernanke speaks is all he does is deny the link between the inflation he's creating and rising prices for things like oil or metals. And so the more Bernanke denies the obvious, the more people are going to buy these commodities. Because if he doesn't acknowledge the link between the inflation he creates and rising prices, he's going to keep creating the inflation. And so the prices are going to keep rising. And last night, the Indian Central Bank raised rates from 6 3/4 up to 7 1/4. They're trying to fight the inflation that Ben Bernanke denies exists. And the irony of it is, their inflation has its roots in America, and we exported it the same way we're doing it to China. But the problem is, India won't be successful, China won't be successful in reining in their inflation until they let their currencies rise and stop buying dollars. That is the problem, because the dynamic is their people are working hard, they're using land and labor to produce products, and instead of consuming those products, they're shipping them to America. And then what are we doing? Are we sending them consumer products that they can buy? No. We're sending them money. We're sending them paper. And so we're sending them inflation, because now they have more money, but they don't have more products because they shipped us their products. If they simply kept their products in their own country and let us keep our paper, they wouldn't be having all this inflation because they'd have more goods to buy and they wouldn't have as much money bidding up the prices. But as long as they're going to subsidize the American economy, the American consumer, by supplying us with goods that we don't pay for, and we're not paying for them, people will say, well, of course we're paying for them. We're sending them dollars. That doesn't count. Paying for imports means exports. If somebody gives you products that they can use, you have to give them other products that they can use. Because after all, they took resources out of production that could have been used to make stuff for themselves, and instead they made stuff for us. So we need to pay them by giving them things that they didn't make. But that's not what happens. India or China, whoever, they're sending us stuff or services, and we're giving them paper, we're giving them inflation. So until they figure this out, they are going to continue to suffer from inflation. And as long as the world is creating inflation, not just Ben Bernanke, but as long as central banks all around the world are continuing to create inflation, then you're going to continue to see rising commodity prices, including prices for gold and silver. So as I started with this blog, I think that the correction now that we've seen, this spectacular rise and fall, is mainly over. I think, in my opinion, it's a good time to now move back into the silver market if you were a little cautious, because we did have such a big increase. And I was advising caution over the last couple of weeks, particularly with respect to silver, not gold. I would say that there's no need to be cautious now. We're back at $40. I don't think there's a lot of downside left. And you never know. Ben Bernanke might come out and say something in the next few days or the next week that'll reverse these short-term declines and send the prices soaring once again. Anyway, that's it for today. Take care. I'll be blogging again next time soon. Bye.